Angela Barnes, and this is Monday the 13th of November. Well, coming up on today's programme, we start with equity markets, and it's a hesitant start to the week in Europe, while in Asia, the Nikkei and ASX 200 end the session broadly unchanged. Cost of living. Well, markets await more US inflation data tomorrow, as well as UK CPI and retail sales figures as well later this week. Also coming up on the show, investors will be looking for holiday sales growth forecasts as we get more US retail sector earnings, which are expected to be the weakest in 5 years. So we've got all of that coming up on the show. But first of all, let's start with volatility and look at the VIX index. And on the day, it's currently up 2.14%. Now, you can see since Friday, volatility has slowly risen after the month of October, saw the VIX fall about 19%. Well, stocks and bonds have been in a tight relationship over the last few months, with the S&P 500 index surging nearly 7% in the last 10 sessions, while the benchmark 10-year Treasury yield has tumbled 37 basis points from a 16-year high. Well, stocks rallied on Friday, recovering the ground lost in the previous session as Treasury yields stabilised, though. But with 30 minutes to go until the European markets open, let's have a look at how the pre-market is looking across Europe. Let's pull up the FTSE 100 chart. Currently up 0.4%, while France's CAC 40 as well set for a higher open, up 0.38%, while Germany's DAX also up 0.29%. Well, European markets closed down, however, on Friday, and that was after the US Federal Reserve Chair Jerome Powell said the central bank is not confident that it has done enough to rein in inflation. Well, the Pan-European Stoxx 600 index also closed 1% lower. Food and beverage stocks led the losses, ending the session down 3.1% as all sectors closed in the red, except oil and gas. And that's as the conflict as well in the Middle East continues to weigh on investor sentiment. Well, let's have a look at things overnight in Asia. Okay, well, the Nikkei 225 up 0.05%, while the Hang Seng was down 0.45%, and the S&P ASX 200 in Australia also higher, up 0.40%. Well, investors will now be looking to more economic data this week ahead of talks between the US and China. US President Joe Biden is meeting with China's President Xi Jinping, and they're set for talks this week in person. And it's the first meeting to take place in about a year. So investors will certainly be keeping across that. Now let's have a look at Wall Street and see how that closed on Friday. Well, the Dow Jones Industrial Average closed up 1.15%. S&P 500 also up nearly 2%, at 1.56%. And the tech-heavy Nasdaq also closed up 2.05% on Friday. So all closing higher. That's for the second straight week as the AI-powered tech rally continued, with Nvidia's share price jumping 7.4% for the week. Microsoft also gained, ending up. Apple, Meta, Tesla, and Netflix as well jumped to more than 2%, while Alphabet also gained about 1.8%. This all comes as well as the US government bond yield spiked following hawkish comments from the Fed, as noted, which may keep any upside momentum in check. So let's have a look at how the equity markets are poised to open today. At the moment, the US 500, the S&P 500 is set for a lower open, currently down 0.35%, whereas the Nasdaq also down 0.439%, and as well the Dow Jones also set for a lower open, at the moment down 0.23%. So this week, investors will be keeping across US CPI data, inflation data, to hear the latest news on the key indicator of the past year. Moving on now, and let's go to Japan. Well, because there's not many macroeconomic indicators expected today, but overnight in Japan, the producer price index fell by 0.4% in October, month over month. As well, then we've got when economists, they had expected it to be flat, I should note. Year on year, the index, however, rose by 0.8%. Now, if we take a look at the US dollar Japanese yen price chart, okay, well, the pair is trading in positive territory, currently up 0.12%, but the positive territory is for the sixth consecutive day during early trading hours today. You can see the uptick of the pair is bolstered by the higher US Treasury bond yield and those hawkish comments from the Federal Reserve last week. The pair currently, as I said, trades around 151.70. Market players will be keeping an eye on that US consumer price index data on Tuesday that comes in, and also as well Japanese gross domestic product data for the third quarter also due this week. US retail sales, producer price index also due. So traders will be likely taking cues from this economic data due and finding trading opportunities around this pair this week, which we'll be keeping across. And moving on, let's have a look at UK statistics expected this week, because the focus will be on the British pound throughout the week. On Tuesday, the unemployment rate is expected to rise to 4.4% in September. On Wednesday, consumer price index growth is forecast to decelerate to 4.9% in October year over year, while on Friday, retail sales are seen falling by 0.4% in October, month over month. Let's have a look at the pound US dollar price chart because the pair has strengthened gains in early hours, trading ahead of inflation data from both economies, currently at 122.36. The pair might have received upward support as well from the better expected preliminary gross domestic product from the UK released on Friday, coupled with a weaker US dollar. But the UK's GDP for the third quarter, well, it declined to 0.0%. compared to the market consensus of a 0.1% contraction. On an annual basis, GDP remained consistent by growing at 0.6%. Well, these figures could improve the market sentiment with the pound sterling course, and even though the data suggests that the UK seems to avoid a recession in 2023, it is still teetering on the brink of a stagflation scenario. And that's as we've noted, Jerome Powell also spicing things up on Thursday in his speech, surprising with more hawkish comments more than expected. So let's look at, in more detail, the US CPI data as well that's expected, because that would, of course, likely impact the US dollar, of course. And so for the latest US inflation data, that will be released tomorrow afternoon. Headline CPI is expected to rise by 3.8% in October year-over-year, after 3.7% increase the previous month. Core CPI growth is forecast to remain at 4.1% in October. And the US dollar basket, if we just have a look today, it's actually flat. Well, now it's marginally lower, down 0.04% against its peers on the day. Well, moving on, and let's have a look at some things on the corporate front, because we've had some earnings out this morning, starting with British Land. Now, if I just have a look at this, well, it was expected, British Land expects estimated annual rental value growth at the top end of its previous forecast range. The group has posted underlying profit growth of 3.4% to £142 million. Dividend up 4.8% to 12.16 pence. And British Land stock, if we just have a look at that, well, it's not an all-session stock on the IG platform, but on the year, it's down about 21% so far. And let's move on now as well to BAE Systems, because it has maintained its guidance for annual earnings to rise by as much as 12%. The group says that orders for military kit continue to flow. Well, moving on as well, because this week we are coming at the tail end of the earnings season, and this week the focus will be on the retail sector in the US. On Tuesday, we have Home Depot, Wednesday, Target, Thursday, Walmart and Gap, and these groups' forecasts will be all that matters in the eyes of investors. Forecasts are already pointing to the slowest holiday sales growth in 5 years. Well, the National Retail Federation says holiday sales, including e-commerce and non-store sales, would rise between 3 and 4% to $957 billion and $967 billion in November and December. And November and December sales last year were up 5.4% and 12.7% the previous one. And let's go back to some of the stocks now, and let's take a look at Home Depot. Here we go, all session stock on the IG platform, currently up 1.31%. But year to date, the company shares have lost about 8% over the past 12 months. The stock is up 1% compared to the 16% rise for the S&P 500. Well, on Thursday, the street anticipates Walmart to post earnings as well of $1.51 per share and revenue at $159.3 billion. The same quarter last year, earnings came in at $1.50 per share on revenue of $152.8 billion. Over the past few years, Walmart has focused on developing its e-commerce segment. In 2019, online sales amounted to just over $25 billion worldwide. And in its most recent fiscal year, e-commerce reached $82.1 billion. And this strategy put Walmart in a better situation than some of its competitors at a time when brick and mortar retail sales don't do as well. And if we just pull up the Walmart price chart, it is an all-session stock on the IG platform, currently up 1.32%. Investors will be looking now for any shift on consumer behavior, online shopping trends, and any information on physical store performance to help gauge the health of its brick and mortar segment. So that we will also be keeping across. Now let's move on to commodities and take a look at how oil prices are doing this morning. First of all, let's start with US crude. Here it is, the price chart, currently down 0.9% on the day at $76 a barrel. And if we move over to Brent, also trading lower this morning, down 0.84% at around $80 a barrel. Well, crude prices have fallen for a third straight week as economic concerns darken the demand outlook. On Friday, the US weekly oil rig count fell by 2 to 616, a decrease entirely down to the number of oil rigs in operations, down to 494. Meanwhile, let's have a look at gold and see how that's doing this morning. Currently up 0.11%, 1940. So slightly higher on the day. The precious metal finished lower, however, on Friday for its second week due to weakened safe haven demand. A spike in government bond yields has added to its downside pressure. Well, that's all we've got time for today on Early Morning Call. Thank you very much for watching, and do tune in for our afternoon shows. Look ahead, we've also got a Beat the Street as well this afternoon ahead of the Wall Street Open. Thank you very much for watching.